Do you have money to invest in the stock market but want to steer clear of fast-moving tech stocks that can shoot to the moon only to come crashing down to earth a few months later? Maybe instead you'd like to invest your hard-earned money into boring but reliable companies that trade at reasonable valuations and pay consistent dividends. Well, I did a ton of research and I put together this list of my top 5 boring value stocks with high dividends that you can add to your portfolio today. Welcome to my channel, Good Money Club, where I talk about high yield, high growth, and unconventional ways to make money in the stock market. Hey everyone, today I'm going to talk about 5 stocks that you can buy right now that give a unique offering to any investor. They all have high dividend yields, so over 5% at the time of writing. And they all have a low PE ratio, so under 10 at the time of writing. And if you don't fully understand these two terms, let me break them down for you real quick. So the dividend yield is the annual payments to shareholders divided by the current stock price. And the PE ratio is the current stock price divided by the earnings per share. I also avoided stocks that might be a dividend trap, which is when a stock currently has a high dividend yield, but that's because the stock price has fallen so much those past dividend payments make up a larger percentage of the current stock price. And future dividend payouts likely won't be at that same yield. With all that said, let's get started. The first stock on my list, number 5, is the ticker symbol PINE, P-I-N-E, and the company name is Alpine Income Property Trust Incorporated. Alpine Income is a REIT, so a real estate investment trust, and what they do is they own and operate triple net leased properties across the United States. So net lease properties really don't have much landlord duties. The tenants are responsible for almost all the maintenance, depending on the exact lease. They're responsible for the taxes. So these are one of the most passive real estate investments that a company can make. They own things like big box stores. I mean, think like Lowe's, Hobby Lobbies, Home Depots, things like that all across the United States. They have a total of 146 properties and they use the rents that they collect from these properties to pay dividends to the shareholders. Let's take a deep dive into some of the metrics on PINE. So I'm recording this on January 1st, it's New Year's Day, so everything we look at is a snapshot of today. So the stock price is right around $19. The PE ratio is 7.62. The estimated dividend yield is 5.85. The market cap is $227 million. And if we look at the 10-year chart of the stock price, so it starts at 2020. So this company went public just over 3 years ago, and the stock's been pretty flat since then. It had a big drop off, during the initial COVID scare, and it's rebounded pretty well. Let's take a look at some of the analyst opinion on this stock. So the recommendation rating, with 1 being a strong buy and 5 being a sell, is a 1.6. So the analysts think this is a pretty strong buy. And if we look at the average of 10 analyst price targets, we can see that it's about at $20.80. So a little over $1 than what the stock is trading at right now. So Alpine Income is great for those looking for a dividend paying stock that generates those dividends through rental income. All right, my number 4 stock is PANL, Pangea Logistics. So Pangea Logistics is a transportation company. They operate those giant ocean shipping vessels that bring stuff back and forth to places like China to Los Angeles. They transport a lot of commodities like grains, iron, stones, and different things like that. They currently own a fleet of 25 vessels. So let's take a deep dive into some of their metrics. So the ticker symbol is PANL. The price is trading right around $5. So at the time it's about $5.15. The PE ratio is 2.94. So this one's got a really low PE ratio. The current dividend yield is 7.7%, and the current market cap is $236 million. If we take a look at the 10-year chart, you can see it had a steep drop off in 2014, and ever since then it's been a pretty steady investment. It's gone up from a low of around $2.50 up to where it is now, $5 or so. Let's take a look at what the analysts have to say about PANL. So using the same rating chart as we were looking at for the last stock, with 1 being a strong buy and 5 being a sell, this stock is at 2.2. So the analysts think that it's a good buy right now. And the average of 4 analyst price targets is $7.31. And you can see that's almost about 40% higher than the current stock price, around $5. So this is a great boring stock. if you're looking for something with a low PE ratio and that pays a high dividend yield, so over 7.5%. And like I said earlier, this isn't a dividend trap, so this company's paid consistent dividends and the stock prices still perform strong. All right, the number 3 stock on my list is CGBD, and the company's called Carlisle Secured Lending. So Carlisle is a lending firm and they lend to other businesses. So think if you're in like pharmaceuticals or software and you need to raise money to help your company grow, you would go to Carlisle and get a loan from them to help fund the growth of your company. They invest in companies in the United States, the United Kingdom, the Cayman Islands, different places around the world. The companies that they invest in are kind of in the middle market, so they target companies with between 25 million and 100 million EBITDA. Let's take a look at some of the key metrics about this company. Their stock price is right around $14, a little bit over $14 right now. The PE ratio is 7.82. The current dividend yield is 10.16%, so this stock has a really high dividend, and the market cap is 735 million. If we take a look at the 10-year chart, you can see that this stock got hit really hard when COVID hit around 2020, but it's recovered pretty good. It hasn't been the best performing stock over the past 10 years, but it has paid consistent dividends, so you've gotten those dividend payments in lieu of that stock growth. Let's take a look at what the analysts think about this stock. So the recommendation rating is a 2.2, right? So on our scale of 1 to 5, 1 being a strong buy, 5 being a sell, that's a pretty strong buy. And the average of 5 analyst price targets isn't far from where the stock price is now, so it's a little bit higher, around $14.70, and the stock currently is sitting around $14.13. So this is a great stock if you want something in the financial services. So our last 2 stock, one was real estate and one was transportation. So if you're looking for something in the world of finance with a high dividend, then Carlisle might be a good choice for you. All right, the number 2 stock on my list is Dow, D-O-W. The last 2 stocks on this list are kind of in a different ballpark than the first 3. So the next 2 stocks, Dow included, are really large companies. I mean, Dow is 35, 40 times bigger than the last 3 companies that we just talked about. If you haven't heard of Dow before, I mean, Dow is a chemical company that makes things that people use to make other things. So they're heavily involved in like plastics. I mean, they make plastics that will be used in manufacturing of other goods. They also make all kinds of other different stuffs, but you can think of them as like a chemical manufacturing company that makes stuff for other manufacturing companies. Let's take a deep dive into some of the key metrics on this stock. So the ticker symbol is Dow, D-O-W. The current stock price is just over $50, so right around $50.39. The PE ratio is 6.56. The current dividend yield is 5.5%. That's a pretty good dividend for a stock of this size. The market cap is around 35.46 billion. So like I said earlier, it's a really large company. If we look at the stock price over the past 10 years, I mean, it hasn't been the best performer, but there was a period in there. Let's say if you bought it in like March 2020, you know, after the pandemic happened at its lows, you could have sold it in 2022 for around $70. So that's a 3.5 times what you paid for it. So the chart looks a little skewed, but it's got a consistent dividend and it's a giant company. I mean, Dow is not gonna fail. It's just too big. Let's take a look at some of the analyst opinions next. So Dow has a 2.9 rating, right? And we're still on the same scale from 1 to 5, 1 being buy, 5 being sell. So this one's a little bit more in the middle. I mean, it's right next to that 3, but it's still trending towards the buy side. And the average of 23 analyst price targets is $51. So almost identical to the $50.39 that it is right now. Dow is great if you're looking for a stock with a low PE ratio and high dividend yield, but you don't want to invest in one of these smaller companies that I was talking about earlier. You want a big like manufacturing company, then you might want to take a look at Dow. All right, next up, my number 1 boring but reliable company that you can invest in today is the ticker symbol T, and the company is AT&T. So we've all heard of AT&T. I mean, they provide the cell phone plans to tens of millions of people across the United States. But they have a couple other services besides that, like cloud services, and they also provide phone services for big corporations. So not all their money comes just from people's iPhone plans. So I don't need to go through AT&T too much, but let's take a couple of the key metrics about the stock at the time of writing. So the price is right around $18, $18.40, give or take a little bit. The PE ratio is 6.79. The estimated dividend yield is 6.01%, so right around 6% dividend yield. And the market cap is $131 billion. So this is by far the biggest company on my list yet. I mean, this is 3 times bigger than Dow, the company that we just talked about. If you take a look at the stock price over the past 10 years, you can see that it hasn't been the best performer. So if you were gonna buy this today, I mean, you'd probably be hoping for a turnaround in the stock, because while the dividend yield is great, I mean, it's got a 6% dividend, you'll want some of that capital appreciation as well. Let's see what the analyst opinions have to say about this stock and see if they think that there's a little upside here. So the current recommendation rating is a 2.6, right? Between a 1 and a 5, 1 being a buy, 5 being a sell. So it's a slightly bullish opinion by these analysts. The average of 23 price targets is $20.28. So it's a little bit higher than the $18.40 or so cents that the stock is trading at right now. So I would call AT&T a safe stock. So this is a company, it's got $130 billion market cap. It's AT&T, it's a huge company. It pays a consistent and pretty high dividend, and it's got a low PE ratio. So you're buying a company that is very profitable. All right, everyone, that sums up my list of 5 boring but reliable companies that you can invest in today in the stock market. So we talked about how they all have a low PE ratio, so you're not overpaying for any of these stocks. I mean, they're all profitable and you're buying it at a reasonable valuation. They also have a dividend yield over 5%. So you as an owner of this company are getting paid at a reasonable rate compared to the profitability. All right, thanks everyone. I really hope you enjoyed this video, and if you did, be sure to hit that like button and subscribe to my channel if you want to learn more about the stock market. I do also need to clarify that this is not financial advice. I'm showing you what I've found through my research and the stocks that I like, and you should certainly do your own research as well.